So in the last lesson, if you haven't seen it yet, go watch it, but we talked about everything regarding what an XABCD pattern is, but also how to find them, what markets to use them in, what time frames, and the importance of using Fibonacci time within the patterns and the price measurements. We're going to dive in deeper now right after this. So just to briefly cover what these patterns are telling us, we have a price and time pattern that is showing us a repetitive emotion that's happening in the market. So now what? Okay, well, to see what direction you're going to trade the pattern in, you're going to have to look at the last leg segment. If the CD leg is completing a low, then you need to be looking at buying. Okay, and you're going to want price to go up. So the CD leg is going down, you're thinking of buying, price going up. If the C to D leg is going up, then you would want to be shorting, or you would expecting price to be going down. So it's just the opposite of that C to D leg. Normally people think, okay, so where do I get in? I want you to stop right there. You've made the first mistake. Okay, so many people are concerned about where they should be getting in, and I get it. You want the best position possible as your entry point. Okay, however, I want you to start looking at where to put your stop first. Okay, think about it this way. If you have a good place to put your stop that was here, and you knew that price wasn't going to get down there, okay, you couldn't really care less about where your entry points were. If it was here, or a few pips here, or maybe a few ticks down here, okay, you can nail your stop. If you can nail that, then you're going to have a general area that is okay to enter, as long as you know where that stop placement is. So it's a stop order that will have a losing trade turn into a realized loss. Okay, it's also your stop that's going to give your trade enough time where an unrealized loss, so a drawdown, can still turn into a realized profitable trade if it was going to hit your target. So here's what you have to remember. Okay, master your stop first. Have that in a good position where you're confident about it, and then master your entry point. There are certain ways that you can master that entry point. We'll go through several different ways inside our education center that you can do that. Okay, we can really hone down in on how to get that best entry point, but it's important first to master that stop, and don't be like everyone else who's only really concerned about where their entry points are. So what situations should you use these patterns in, like trend trading or reversal trading? I just want to show and demonstrate to you that these patterns can be used in both trends and reversal situations. So let's start off with a trend channel, and we'll identify one that looks pretty obvious here. Okay, the next step, of course, is to look for a pattern that would happen at the point where you would want to buy. Okay, anywhere, of course, along the bottom of this trend channel, you would want to buy if you're going to be trading within the trend. Okay, what we're going to do here is apply a consistent way to get into the channel by using a pattern and the channel together. So that's one way you can use the trends and the patterns together. The second way you can do it is by looking for reversals. So you might be looking for double tops or double bottoms, something like that, that might show you where price is going to reverse. And then what you're going to do is identify that double top in this case, and then look for a pattern that would happen that you could have a reversal trade on. You'd be looking for price to be pulling back. So as you can see, it doesn't matter if you're looking for trends or reversals. It just depends on where you want to look for a pattern to keep that entry, and more importantly, the stop, consistent and also in a good place. So can you take these patterns and apply them to an existing strategy? And basically, yes. I mean, you can use these patterns as a strategy on their own, or you can use them as part of an existing strategy. It's very similar to how we showed you with trend channels or reversals. You know, any point that you're looking for a trade to move away from or go with an existing idea, you can certainly apply these patterns to that. So that concludes lesson number 2. Hopefully you've gotten a good idea of how important stops are, and then we'll narrow down entry points and a lot to do with targets. We do that on our website, XABCDtrading.com. But continue on to lesson 3. We're going to talk more in depth about how we weight trades and how we weight patterns and a whole bunch of other stuff. So continue on to lesson 3. Don't forget to subscribe. Write your comments about this lesson below if you have any, and we'll see you guys in the next one.